Hi guys, it's Ian and this is your weekly market wrap up. It is Friday the 9th of May 2025, just coming up to 8 o'clock in the morning in the UK. We've seen a prolonged period of consolidation in the US dollar and dollar denominated products, but we have seen a breakout yesterday, euro dollar breaking out of a range to the downside. Also sterling against the US dollar, and we've seen some upward movement in dollar Swiss, dollar yen, etc. Is this move going to be prolonged or established? There's hints that we're going to see choppy price action, I believe, in coming days and weeks. One product that I'm particularly focused on today is the Dow Jones, which is the US30. I've got a bearish outlook on that index that in turn could see a move higher in USD. Before, we used to have quite solid correlations, so stocks used to move to the downside would see a move higher in the dollar, the Swiss franc and the Japanese yen as safe haven currencies. That's gone out of kilter a little bit, but I think we're still going to see that upward move in the US dollar. One thing we're also going to look at in today's video is gold. Obviously correlated with the dollar and risk on, risk off. I think risk off is going to be the dominating factor for gold in the days ahead. So let's get to the charts. So the first chart that I want to look at is the US30, and just to explain what you're seeing on the screen here, this is a trading view setup. Bottom middle, we've got the monthly chart, then going going clockwise, we've got weekly, daily, 8 hour, 4 hour, and then down here's the hourly time frame. These dashed black lines are my bespoke support and resistance levels. So something that I established quite a few years ago, and they highlight areas of resistance in multiple time frames or support in multiple time frames. And when we get these levels together, and you can see at the moment that we've got two dashed lines together, they offer a more substantial barrier. Okay, what often happens is that we'll get a break of these levels, come back below and then retest these barriers, and that's called a fake out high or a fake out low, and that can sometimes establish the top of the trend. So the time frame that I'm really concentrating on for the Dow Jones or the US30 is this time frame. It's a 4 hour time frame. What do I see? And there's a great book out there called Trade What You See, and it's what you see on the chart, not what you want to see on the chart. So I see an ending wedge formation. I've also got these barriers that I previously mentioned, 41,410 and 41,440. What has happened? Well, we continue to see higher highs and higher lows, but yesterday's rally was quite aggressively sold into. Now, if we just put some indicators on here, I'm actually going to put this indicator on, which will highlight previous days highs and lows, hopefully, when we get established. Let's just go down to a shorter time frame. So that's the 120. It's not loading up, unfortunately, but what we have seen is we've seen a breakout of the previous range. So the previous range was 41,456. We've seen a breakout, and then we're seeing a retest of that this morning. Now, previous highs, previous lows leave areas of resistance and support. Those areas are often taken out. A smart money concept would say that that's a hunt for stop losses. Okay, obvious places for stop losses to be established are above previous highs and below previous lows, or around big figures. So what was happening is we were grinding higher. Obviously, Some traders would have taken short positions on this move to the downside, thinking that the downtrend has been established. They then place stop losses up above here. What happens is smart money comes up, collects those stop losses, if you like, and then moves to the downside. What we can also see sometimes, which I quite like, which is the Wyckoff theory, is when we see periods of consolidation. So they call this distribution and accumulation. So distribution is towards the top of a trend. So this is actually when smart money is accumulating or building short positions. And then what they have a tendency to do is break higher, like I said, take out stop losses, come back into the range for a while, and then break to the downside. And what we often see when this happens is a bearish head and shoulders pattern. So inside the wedge, left shoulder, this then establishes a neckline, head, and then we move lower like that. So ending wedge formations, head and shoulders formations, often seen at the end of an Elliott Wave pattern. So after 5 waves, we get that choppy price action as we try and establish the downtrend, and that will often result in an ending wedge pattern and or a head and shoulders formation. So winding higher in this ending wedge, we're seeing a rejection this morning of the resistance zone on a break of 41,147-ish, which is the trend line support. The measured move target is down here at 39,745. Why do I like this? Well, I like this pattern because the most important thing for me is to have an established entry, and we spoke about this in last week's video. So an established entry, an established stop loss, which is a break of the swing high in this case, and an established target, which is the wedge pattern. So I know that if I get short here, or around about here, I then target 39,745, and I place my stop loss above the previous swing high. I've got a risk reward factor of 3.86. Anything to me above sort of 2.5 is viable. I really want to be getting 3.5 to 4 R before I pull the trigger. So just to highlight what we've talked about there, I'm expecting downside pressure now in the US30, which is the Dow Jones. I'm looking for a breakout of this ending wedge pattern. The measured move target is 39,745. If we see a break of the high, then my flip has been broken, and we could see further gains. Next, I want to talk about DXY, the dollar index. I want to talk about cycle analysis. I want to talk about where we are when we look at the big picture, which is really important. Okay, big picture analysis, the reason why we've got all these different time frames on here, and basically how to trade it and how to sort of work out where the support and resistance levels are, where we are in the cycle, whether or not we're trending, counter trending, and where we should be placing our bias. Okay, so for this I'm going to be looking at the weekly chart. So this is DXY weekly chart. This is just a vanilla chart, got nothing else on it. Okay, it's just price action. What can I see? I can see 5 waves to the downside. What can I also see? I can see a morning star formation, not quite a morning doji star formation, but nonetheless a morning star formation. What does that dictate? Well, for me, it dictates that we should be seeing upward pressure. Okay, we've established a base with that three candle formation, and we should now move higher. What does it also tell me? Well, it tells me that the move higher is not going to be impulsive. 5 waves is impulsive. what I'm going to see is a corrective move to the upside. It's going to be mixed, it's going to be volatile. Waves, unlike this pattern here, waves are going to overlap each other, making intraday trading pretty difficult. Okay, so we've got to really focus on support and resistance levels and the big cycle where we're expecting it to go. So this is giving us our upward bias, if you like. We then want to be looking at fib levels. Okay, so this is breaking down to the daily chart. So we're going 1, 2, 3, 4, 5, pretty nice, pretty established. We've got support here, which is 99.70. We've got resistance here, which is at 102.07. We've moved higher. What's happening with these wave patterns? Well, they're just overlapping each other. We're not seeing bullish candles that are just projecting higher. So it's already telling us, warning us, not to stay in the trend too long. Okay, if we're getting into trends, really, where is the minimum target, not the maximum target, because these trends aren't going to be lasting too long. What do we have here? These levels, the retracement levels, you'll notice they're a little bit skewed with regards to Fibonacci. So normally 61.8%, 78.6%, 161.8%, 261.8%. But these levels are for cipher patterns. Okay. So what will normally happen after a 5-wave sequence to the downside? We will get a 3-wave correction higher. That 3-wave correction higher will normally be established as a cipher formation. If you haven't studied cipher formation, again, that book that I was talking about earlier, Trade What You See, great book with regards to cipher patterns. And what will normally happen after 5 waves is we'll get a 3-wave pattern. And where this first leg establishes itself is extremely important, because that then gives us a target for the big picture. Okay, around this level, which is actually 34.1%, believe it or not, that would establish a back formation. If we get 44.8%, then it actually means that we're going to break this formation to the upside, so that's pretty much irrelevant. This level is a back formation. This level, which is 61.8%, and the most common cipher formation, and that's the Gartley. So it goes to 61.8%, comes lower, normally quite a short BC leg, and then moves up to this this completion, which is 78.6%. So these two are common fib levels, if you like, and this is one of the most common patterns, but we have those other patterns within inside. So what we are doing at the moment, we're moving higher in a choppy corrective formation, and I expect price action to remain choppy and corrective. If we go down to this time frame, remember I said that these dashed lines are my bespoke support and resistance levels. If I go here, okay, this lines up with a 78.6% pullback level. So what do I want to be doing? I want to be getting rid of all these others, because that is my sort of established first wave. So remember, we're talking about this large A, B, C, D formation on the daily and the weekly chart, but it's going to be built of minor waves. Okay, the corrective formations are normally extremely choppy. So 78.6%, there can be two patterns established from here. We can see the Gartley, which would be something like this, or we can see this pattern, which is known as a crab formation. So at the moment, the bias is bullish. But what is happening overnight? Well, overnight we're seeing this trickle to the downside. We've got support here. So what I'm looking for in a shorter time frame, let's just get the right tool, is a move lower towards support and then a break back higher, either to 61.8% or to 78.6%. So my bias in the dollar is bullish, but there is ample scope for an intraday move to the downside. Always remember what time frame we're in. We're in the 8-hour time frame. So if I move this down to an hourly time frame or a 15-minute time frame, then it looks like I've got a lot more journey to go. Okay, it's so important that we establish where we are in cycle analysis so that we can get into trades in shorter time frames. So just to highlight what we talked about with regards to DXY, big picture analysis, 5 waves completed on the weekly chart. We're in a corrective sequence higher. Really what we want to be doing, we want to be buying dips in dollars. Okay, so that means selling euro dollar, sterling dollar, buying dips in dollar yen, but because we've got that negative bias with regards to US30, we could see some choppy price action there. Also with regards to gold, we're going to talk about gold in a minute. I think the dominating factor in gold is going to be risk off, which will push gold to the upside. So let's go to the euro against the US dollar. Let's just pull these in a little bit so that we know what we're talking about. Hopefully, let's get rid of that because that's irrelevant. Big picture analysis. So the opposite of DXY. Wave 1, wave 2, wave 3, wave 4, wave 5. What can we see? It's impulsive. Okay, these moves higher, these big green candles dominate the move to the upside. That should dictate that the move to the downside is corrective. What do we see? Opposite to the dollar again, we see an evening star pattern when we saw a morning star pattern on the DXY. So we've got a topping pattern, we've got 5 waves. Really should be looking for moves to the downside. What do we see here? Some people might see I'm going to go with that. Some people might see a head and shoulders pattern. Not quite sure myself. I would have preferred a bit more of an established neckline, plus the fact, where do you put the neckline? Was the neckline there and this is a retest, or was the neckline there? We're going to get a retest this morning. What we do have is we have a peak, then a higher peak, and then a lower peak. So what establishes a downtrend, or what is the basis of a downtrend? Well, uptrend is higher highs and higher lows. The downtrend is lower lows and lower highs. That is really getting down to the sort of basics of trading. What do we have in DXY? Well, DXY, remember we're using correlation, so we're overlaying the bias from the dollar onto the bias for euro dollar. So the bias for the dollar is to buy dips, so we should be looking at selling rallies in the euro against the US dollar. We've got, right, to the downside, corrective formations. There will often be in sync or fractal moves. So AB equals CD. Okay, so these formations mirror the previous formation, often in 3 waves. So here, 1, 2, 3, 1, 2, 3, expecting 1, 2, 3 to the downside. We've got resistance at 1.1294, and AB equals CD formation is located at 1.1075. Further support to the downside is located between 1.1022 and 1.1098. Why again is this important? Well, if I want to get in a short position, as I said before, I need to know where my target is, I need to know where my entry is, and I need to know where my stop loss is. If I don't know those 3 factors, then I'm gambling basically. So here, if I was to take a short, so I squeeze down to my support level, the stop's above this established swing high, which is also pretty pivotal. I'm getting 3R, not bad, not great, but it's better than 2R. So just to highlight what we talked about there, correlation with regards to DXY, the dollar, we should be selling into rallies. 112.94 is intraday resistance. 110.75 is a measured move target. Sterling dollar, choppy price action over the Bank of England yesterday. It's a similar pattern to euro dollar. We've got 5 waves up on the weekly charts. We've got reversal formations off the high. This looks like more of an established left shoulder. How do we get the measured move target? I suppose we should talk about that. The measured move target is an established pattern, a breakout. What often happens, let's get the measured move target first. Take the head to the neckline, project it from the breakout level, which is there, okay, and that is your measured move target. Again, it's a bit like an ABCD formation, but obviously ABC would have started up there and not the breakout of the neckline. So the neckline is at 132.70. The measured move target is at 130.80. What often happens with breakout formations, so any wedge patterns, what often happens is we get a breakout of a wedge formation, comes back and retests the breakout level, not necessarily the level, but actually the line, the breakout line. So it can be slightly higher or slightly lower than the breakout level. It often happens again on a head and shoulders pattern. So the breakout level is at 132.70. I've got resistance today at 132.73. What do I not like about trading this? Really, if you're using sort of swing highs and swing lows for stop losses, then placing a stop loss up here is going to give me 1.4R, so not great. If I sort of pull it down to this swing high, still 2.6. It's not a great setup as far as I'm concerned. Let's look at dollar yen. Okay, choppy price action in this major pair. What do I see on the 1 hour chart? Wave 1, wave 2, 3, 4, 5. What's it done? Well, it's taken out stops, isn't it? So we got above that previous swing high. This would be analysed as a fake out high. So fake out high, soak up some stop losses, and then move to the downside. What can I see on a 2 hour chart? And again, choppy price action. Look at the daily chart. Impulse moves, corrective moves, impulse moves. What can I see on this chart? Well, I can see an expanding wedge formation. The expanding wedge formations are difficult formations to trade. Why are they difficult formations to trade? Because the range gets bigger as it continues to trend higher. It continues to get wider and wider. Okay, whereas the ending wedge formation gets smaller and smaller. So we know where our stop losses are. We're using swing highs, swing lows, etc. So what could happen here is we could see a move down to support and a move back up to resistance and then a breakout to the downside. What is the measured move target? The measured move target is here, okay, the start of the wedge. So if we can establish a short position up here, then we can possibly get in a decent risk reward pattern to the downside. But at the moment, I'm seeing risk off. This pair could continue to to move to the downside. I'd be wary of a bounce around here, 144.13. Then we might be able to establish some sort of pattern, but at the moment I can't really see it. So using a fib extension tool, move lower up in wave 2, breakout, maybe a retest in 4, and then a move to the downside. The bias is bearish. It just matters where we can get into this trend, and there's better products. Okay, a lot of retail traders that I talk to are fascinated with gold. Gold is probably traded far more than any other asset. My watch list has something like 60 different products. I'm looking for prime assets to trade. I want everything to line up. It's not going to happen in gold all the time. It's not going to happen in dollar yen all the time. It's not going to happen in euro dollar all the time. That's why we look at euro sterling, euro swiss, euro yen, sterling CAD, etc., to try and establish the best trade asset to trade at that time. So bearish bias in dollar yen, but could get some choppy price action. So let's go to gold. We've done a report about this morning. What's happening here? This is the 1 hour chart. We've seen a 5-wave pattern to the upside. That should establish that the move lower is corrective. What's also happened? We've overlapped. Okay, so impulsive moves do not overlap. It continues to make higher highs and higher lows. Corrective moves break formation. Okay, so this is already saying to me this is a corrective sequence. I've got support located at 3,307. Is this the completion of the downward trend? It could be. That's all I can say about this, because this could then become this, and then we can move to the upside. What am I seeing on shorter time frames? A possible head and shoulders formation. Support is located at 3,307 today. So I really want to be getting long of gold if I wanted to be doing anything really. If we go to this time frame, and I think this is more important, this is the 8-hour time frame. We stalled at this 78.6% pullback level. Impulsive move to the upside, remember that 5 waves. Corrective move lower. Have we established this BC leg? Maybe, maybe not. What is the target level? The target level's up here, the butterfly. What's it going to do? Well, if we break up here, again, smart money is going to be collecting a hell of a lot of stop losses above this previous swing high of 3,497, 3,499, 3,500 basically. What is the best setup for trading gold? Well, these formations, these BC formations, will often retrace 38.2% or 38.2% or 88.6%. Okay, so what is the best setup for gold? Well, we've already broken through 38.2%, so the next one is down here. Why is that important? Because if you are bullish in gold and you do want to take a long trade in gold, then you've got an established entry, an established stop, and an established target, going back to money management, which is 70% of trading. So long position, so you take a long there, you try and bleed it up to this completion target, and you place a stop loss below. You can potentially get a risk reward factor of nearly 10R on these trades getting into the CD leg. You're probably not going to get in there, because what you really want to see is a reversal formation, so bullish outside bar, morning doji star on a shorter time frame. So you probably get in around about these levels, but still 4, maybe 5R with the target up here around about 3,576. So just to highlight or go over what we've talked about in this video today, US30, Dow Jones, I have a bearish bias, looking for that ending wedge formation to break out. Excuse me. Dollar index in a choppy formation to the upside, expect intraday volatility. Dollar yen expanding wedge formation has a bias to break to the downside. Gold expecting safe haven status to be re-established in gold and for it to move to the upside. Okay guys, I hope that's been educational. Very best of luck with your trading next week. Have a great weekend, and I'll be back soon with more analysis. Many thanks.